like a like a tractor in first gear. We've not really had any pullbacks. We've not had any. We're not had any big smashes, which we've always seen in the past. I guess the biggest news is now we know where that 300 to 400 tons that's been onshored over the last 4 to 6 weeks.
Yeah, well, a lot of good things you mentioned there, and would also like to get your opinion in a moment about. I hear that 45,000 contracts were just opened up, which is quite unusual at this point in the cycle. Although, man, as I'm pulling up the chart here, obviously there's been a rally for the last year and a half, and if you're following day to day, and then, but I mean, since the beginning of the year, what is that? $540 higher in the gold futures? I hadn't thought of it quite as stunning as that. I mean, I know, geez, that's it would match what you're saying.
Yeah, a couple things. One, you said a year and a half gold rally. When did that start? What started it? Go back to when
2019.
Russia's reserves were confiscated, stolen, whatever you want to talk about, or whatever you want to call it. From that day forward, gold has done nothing but go higher, and that makes sense because foreigners look at Russia having, what was the number, $300 billion sequestered, and foreigners are saying, well, hey, if they can do it to Russia, they can do it to us. And what that's done is it's mobilized foreign sovereign treasuries, foreign central banks to offload treasuries, and they're buying gold with it. And you mentioned another 45,000 contracts. If you look at the volume for the day, I think it was a very low number, like 7,500 contracts or something like that traded. So if that's what traded, then how did they open 45,000 new contracts? What I'm getting at is can the COMEX numbers really be trusted?
Well, I know Dave Kranzler is fond of pointing out how they have the disclaimer. Actually, now whether they're accurate or not is another story, but their disclaimer actually essentially does say that you can't trust them because they say there could be errors, and I know multiple banks have been fined. I did have this handy in case there's the 45,000 contracts there. I don't know if there's anything else you wanted to have in the background and comment on there, but I get your
Yeah,
point.
but look at the volume for the day. The volume for the day was it was a fraction of that. So my question is, how do you open 45,000 contracts if you didn't even do that much volume during the day? Where did they come from? Were they off exchange and now they're on exchange? I mean, I don't know. The math doesn't quite work out.
So there's some degree to which you're sensing that there's at least an indication of something unusual happening, which is also
Right.
okay.
Exactly.
Now, along those lines, obviously we've heard a lot about the metal coming from London to New York, which, I'm thinking about it on one hand is exciting, and there's again indicative of stress. Yet also at the same time, when we're hearing, well, is there going to be a short squeeze or a shortage in London? Even if there were, how do you distinguish? I mean, it's not like the metal disappeared. They didn't throw it into the ocean. So the overall net supply is still there, but when we see the metal shifting its location, what does that actually mean or imply ultimately?
I view it as a fire hose. Wherever the supply is going, there's a fire and they got to put it out.
Okay. And who is it that is taking the metal and holding it at this point now once it's being shifted?
I mean, who knows? Who knows who owns these contracts? But just understand, people for years have said, when's it going to happen? You're watching, you're watching a failure to deliver happen. You're watching the nuts and bolts of that happen. I mean, think about this, Chris. If you go back 10 years ago, I would bet that there were not 300 or 400 tons for the whole year delivered. And you cannot print gold, you can't print silver. So if somebody's standing for delivery, um, and they don't accept a 20% profit bribe, they want the metal instead. This will end in a failure to deliver. That's going to happen. Is it immediate? Well, it looks like we're in the process of be just simply because of what's standing for delivery in both silver and gold. It's going to happen fairly soon.
Well, I hear you, and fortunately for any of those naysayers out there who say, "Oh, Holter's been saying this forever," we'll get there's an
Wait,
intriguing.
wait. I've been saying that forever. Kiss my ass because I'm pretty much right.
Yeah, well, you have a testimonial that we'll get to in just a moment. Although, Bill, here's another one that I've been thinking about. If there were never any tariffs going to be placed on England, I'm thinking, well, then why was it necessary to shift the metal from England to the US? And I heard someone say, well, if people are getting or industrial users are getting their silver from Mexico or Canada, maybe then that becomes an issue. So they'd want to pull the silver out. I'm like, okay, I'm not sure that fully explains it to me, but all right, that's plausible. Yet, if we're not using gold industrially, and there were never any tariffs. I never heard any talk of any tariffs that were going to be on England. Why did any gold ever need to be moved from England to the U.S.?
Well, you found out yesterday. What was the number? 300, 400, 500 tons have been onshored over the last 4 to 6 weeks. And now all of a sudden, first notice day, there's 333 tons standing for delivery. That's your answer.
So you think this is new investors who are initiating positions in the West, and that the gold, we'll stick to gold in particular for the moment, had to flow to New York to meet newly
Right.
created demand?
Yeah. Otherwise, you get a failure to deliver, and then COMEX is done. I mean, the COMEX gold fails, COMEX silver fails. And what does that mean to all the other contracts outstanding? Like, corn, wheat, uh, fuel oil, interest rates, et cetera, et cetera. If you prove two contracts to be a complete fallacy where they can't deliver, my past partner, Jim Sinclair, used to pose the question, what is a contract worth if it cannot perform? And the answer is zero. And he posed the possibility of seeing COMEX gold at $10 an ounce offered, no buyers, and physical gold bid at $50,000 an ounce and no sellers.
Well, we did see a divergence in the spread between Bank of England gold and
Yes, we
LBC
did.
gold, so we're not far off. Bill, would it be correct to say, based on what you just said, that at least on the gold side, we'll stick to again that this idea that the tariffs caused the metal, would you
No,
say, is that 100% false at this point?
uh, I don't know if it's 100% false. I mean, yeah, you've got some people who believe that, and I'm sure have acted on it. So you've got some flow because of the tariff news. But I don't think tariffs are a real underlying reason uh, to be onshoring or for London, Switzerland to be sending, buku amount of gold to the United States. I mean, I think it's pretty obvious. In 3, 4, 500 tons have been onshored. I mean, you don't have to be a rocket scientist to put those two data points together.
Well, I thank you for simplifying it for all of the users in the audience. It's the delicate delivery that makes you the big teddy bear that you are, Bill. Although, and certainly I can only imagine that's what drew Robert Gottlieb, former JP Morgan precious metals managing director. So we'll leave aside thoughts on JP Morgan, but someone who's seen closer access than I have, maybe not you, Bill, but he writes some great comments on LinkedIn, and including this one, which fortunately, as your humble host here, pulled the bullets out for everyone. Make this easier. And Bill, I'll just read a couple of the highlights. So he mentions banks can borrow gold from central banks while there is no backstop for silver.
That's correct.
And this post was about primarily silver. So there you go. Can borrow gold, no backstop for silver. Swap dealer bank positions per the CFTC are extremely large, which we actually, that was my note that reported earlier this week. But as of a week ago, that was now, it had surpassed the peak in 2024. And when Robert was saying this, that was the second highest aside from July of 2016 when they were about 5,000 contracts more short. Anyway, they're extremely large. Someone may be taking a huge position and be very exposed. So I get it. Like some people think you and I are wing nuts in the silver community. Here's the guy from the biggest, who was high up in the biggest bank. Also expect silver to get more distorted. Swap dealers are the shortest they've been in a long time. Tightness has to be fundamentally bullish. Expect gold EFP to become more distorted. Bill, any thoughts on that? I think he's saying inadvertently Bill Holter was right, but what do you say?
Well, I think if you follow that through from start to finish, he's talking about a failure to deliver. I mean, that's the bottom line. And again, I mean, I've said for many years, my thought is that silver will be the one that fails to deliver first. And one of those bullet points is talking about, central banks lend gold, but there is no lender or supplier of last resort in the silver market. So I've thought all along that silver would be what fails first and acts as the pin being pulled on gold's grenade. I mean, time will tell. It doesn't matter whether gold or silver fails first, but they're going to fail to deliver. And when they fail to deliver, then what is the saying? They become unobtainium.
Well, I'm just noticing that Wall Street. I don't know, Bill. Is J.P. Morgan or Robert? Are they subscribers on BillHolter.com? Are they on that mailing list to make sure they? And that's a darn good picture of you. Look at that hat there. That's sharp in the front.
Yeah, a few years ago.
Well, okay. Although we got two more questions here before we let you run. I know you have quite a busy schedule today. As in fact, obviously you're involved. You do take orders for retail silver. Would be curious anything you've been seeing lately. Any shifts? Obviously, we had a period of a lot of selling on the retail silver
Right.
side. Anything you can share there?
And gold. Yeah, both gold and silver. I'm going to say from late October into February, I mean, there was more sell orders. I took personally more sell orders than I'd ever taken combined in the previous 15 years. And my thought process, I mean, just after talking to some of these people, this is not people taking profits. This is people running out of money and needing the capital. And I think it goes hand in hand with the feeling that there's less money on the streets. Now, in the last 3 to 4 weeks, we've definitely seen less selling, and then the buyers are picking up. So that phase or whatever it was, I think that's coming or has come to a close.
Yeah, well, interesting
And
to hear.
Chris, let me just mention, just to be clear, that's retail gold and retail silver. That's the mom and pop stuff. You're talking about orders of 500,000, a million, 25,000, whatever. I'm not talking about $50, $100 million institutional trades. That market is obviously tight, and you can see it. I mean, the perfect example is, what is being delivered off of silver. What was the number? 80 million ounces, 81 million ounces?
Somewhere around there.
And then add to that 333 tons of gold. I mean, both of those numbers are completely unprecedented, and that's institutional Those are institutional traders, and that market is super tight. And you're also seeing the lease rates go up.
Yeah, and one question on the deliveries bill that I'm sure we've talked about before, but it would be good to get your opinion on again. How do you distinguish between, we are seeing the deliveries, although we're not seeing it come off the exchange or out of the warehouses yet?
Um, well, we will either see it come out of the warehouses, or you'll know that the buyers took whatever the number is, 15, 20, 25% premium to not take delivery. And I mean, that was a trick used for years and years and years, that if there was a big buyer that was standing for delivery, many often you would see that just go poof, it's gone. And that poof, it's gone without anything being delivered. That's a fiat, bribe or whatever, not to take delivery.
Okay. Well, yeah, and like you said earlier, I've been wondering the same thing where we saw this period of a lot of selling. I feel it was even longer than the 5 or 6 months you were saying, but still during that period, I've heard multiple reports of coins and bars that dealers are buying back being melted down, getting used for industry. And I'm thinking, well, if we're running a deficit, well, there's a lot of silver coming back online. What happens if those sellers at some point turn buyers? And perhaps we'll find out soon enough. Although, Bill, last question. I had planned to make this the Bill Holter reciprocal tariff special, although you were charming me with all that silver talk right off the bat. But any thoughts, A, for anyone who may be hearing the term reciprocal tariff versus tariff? If you could explain what that means, and anything you'd like to comment on of how you think this old baby is going to roll out.
Yeah, reciprocal tariffs. I mean, you might as well just use the uh, two words, trade war. I mean, that's what it amounts to. If you got, we're going to tariff you, you're going to tariff us. If you're going to tariff us, we're going to raise ours. You're going to raise yours. I mean, no matter what, tariffs will slow business down. Tariffs will create less cash flow in the system. And you couple that together with what is Doge doing? Is it $200 billion? Is it 500? Is it a trillion? Is it 2 trillion? All I know is whatever gets cut and or canceled, that's money that's not going into the system. So now you have tariffs that are going to slow down the cash flow. You got Doge that's going to be cutting cash flow off to a lot of these goofy, woke tard programs. So what they're saying, what they're telling you, and I mean, I think it's on purpose because there's no way that Trump doesn't know that, tariffs are going to create less cash flow into the system. There's no way he doesn't understand that if we don't spend $500 billion, that 500 billion is not in the system. It's not part of GDP. What they're doing is they're cutting the lifeblood off to the Ponzi scheme. And I view it as, I really believe, because they have to know what the results are. This is a planned takedown of the system.
Yeah, well, I guess the way I've been looking at it, I mean, back when right before the election, after the election, where it's like, at least based on what I've read of Austrian economic theory, which I guess there's some real life impact, but it's like, sure seems like if they do this, then that idea of kicking the can down the road, that the amount of road left would be
Is shorter.
significantly shortened. And so far, now I know things can change quickly, but so far they have not indicated that, okay, we're just kidding. And I guess we'll see what happens. Although, fortunately, if all of that does go through as planned, I know one of the best places to stay posted on everything Bill is seeing is at billholter.com. And Bill, anything else you would like to share, or if people want to get in touch with you, or anything else before we wrap up?
Yeah, if you want to reach me, you can go to my website. There is a contact button there. Or if you want to just contact me directly on my email, my business email, it's bholter at proton.me.
yeah, fascinating things happening in the gold and silver markets. And we will, of course, have to do this again soon. Oh, and Bill, you're going to be joining us for Silverfest later this year whenever we have our date set.
That's the plan.
All right, celebrity speaker down here, Florida
Oh,
for
one more thing.
yeah.
One more thing.
Mhm.
I'm not positive on this, but I do believe sometime in early June.